If you're not integrating AI in your portfolio in 2025, you're going to get left behind. The good news is the 3 prompts I'm going to give you inside this video are going to help you pick stocks, pick trades, and analyze every portfolio decision you have. This is exactly what's happening behind the scenes on my Tesla option selling bot. I'm an option seller. I collect premiums in my sleep, but more importantly, I've adjusted this portfolio to be able to trade itself. And with AI, with technology today, there's no excuse you just can't start winning in the markets. Most of the time, if you're new to the markets, you got to figure out all this stuff on your own. What stock do I choose? Which option do I sell? How do I adjust the portfolio this month, Matt? And that's exactly what some students do in our coaching program. They come in and they have to put the pieces together. We help them do it faster, but if they're on their own, it takes a while. This one student's a great example. It took him 3 months to really figure out how he wanted to integrate option selling in his portfolio, which was very large. But once he figured it out, with the system I'm going to show you and with the system we teach our students, he hit a $200,000 year so far. So the faster you start integrating this, the faster you can reach your goals. Time is of the essence. And if you want the AI prompts, you can just get them for free. The 3 large prompts that are going to help you do those 3 things I talked about. Head to the link here, apply.marketmovesmatt.com/prompts. And that way you can get all the prompts that I'm using today. The number one thing you have to understand is you're going to have to start with a quality name. Because if you're going to put your money on the line, the only thing that's going to move the needle for you in the positive direction is having something that goes up over time, maximizing a long-term trend. If you play within the risky stock category and you're betting on the latest meme stock, you're just going to get crushed long-term. The short term might be profitable, but the long term will hurt. This is a list of all the puts that are paying high premiums. So all this means is options that can pay me 1% or more in a week. Some of these options you can make a 2% return in a week. 52 weeks in a year, 100% return in a year, selling puts. Not bad, right? Some of these stocks you might know: Tesla, Webull, Sunrun, BBAI, Hood. But what stocks on this list pay you good profits, but also protect your money long term? That's the big question. And if you have to figure that out on your own, you might make some mistakes and you might get stuck in some real big duds that drag your portfolio down forever. So the prompt I'm going to give you is going to analyze the company, make sure it's stable. We're going to check revenue, make sure it's going up. Obviously, a company that's making more money is gaining more market share, has a great product. We also want to make sure that they're going to have positive margins. If they can eventually flip them to positive, that's key. But more importantly, are their margins sustained? So if they're making 5% on their products from profit margins, can they keep that the next year and the next year? A company that's not strong will lose margins. And so that's a very important metric, especially for profitable companies to measure. Also, are you betting on market leaders? Are you betting on 3rd, 4th, 5th place stocks? You don't really want to be betting on the laggards in a sector because there's a reason they're not winning, and you should be nervous for that reason. Just like Lucid. Lucid's my best example. Hypey name. You know, electric vehicles had their bubble back in 2020. Tesla went up from $20 to $400. And a lot of these other stocks that were related to Tesla, related to electric vehicles, had massive bull runs. And so everyone got excited, but they never looked at the fundamentals. What happened here with Lucid is the company, more importantly, wasn't making lots of money, but losing tons of money. So whenever they made, let's say, $1 billion, they would lose $3 billion. Make $1 billion, lose $3 billion. You don't want to be going into companies with this strategy I'm going to show you if they are losing money. So positive margins are key. They have to be making money at some point soon. And more importantly, revenue's been flat for Lucid forever. So there's 2 things here that just don't make sense. No revenue growth, no margins. It's not a market leader, They're not producing the most cars in the electric vehicle space. Again, they're third, fourth, fifth place, and maybe even worse. And what this does is it pushes down the stock from $30 to $2, and then from sometimes $2 to $0. And then it eventually has to reverse split and go back down to $0 again. So this is the worst thing you can do with your money. Get stuck in crappy names. So you have to throw in this prompt. All you're going to do is copy and paste this sucker, which is in the link in the description. And then you're going to analyze the company. What this does is it analyzes everything I just said, but also scores the company 1 to 10. And gives you the reasons why it's not a 10 or why it is a 10. So if I go into one of the prompts, I'm going to show you exactly what was output. But if a company is not a 10 or an 8 or even like a 6, you want to look at it as a trade, not an investment. Trades are like, hey, I'm in it today, but if this thing drops, I'm not going to hold it forever. You have a stop loss in mind. Trades have stop losses. Investments, you always want to buy more of. So you're always doubling down, tripling down, always dollar cost averaging. So that's the main difference with the stocks we're looking at. So if it's an investment, revenue is increasing, or it is going to increase in the future. If it's a trade, it's losing lots of money, like Lucid. And investments are the companies that are making net profits, that are paying investors, that are creating value for the investor. So investments add value to the world, make our lives easier, and trades are something that are pipe dreams, stories. Like it's the company that was taking people to space. Does that add value to the world? Maybe, but it's more of a story-based stock. Revenue potential, what could it capture? So it's very important that we are attacking big markets. So we want to look at market size and the TAM, the total addressable market. The bigger the market, the bigger the pie we can slice up. So if it's attacking a big market, it's also a good investment, long-term hold. So I threw Tesla in here. Again, I'm running my AI bot on Tesla to option sell, and it gave me a 6.8 out of 10. So we have a strong moat. We got a high TAM. We're attacking robotics, energy storage, electric vehicles, robo-taxis. So as you can see, the breakdowns of the most important components are revenue consistency, margin, TAM, PE ratio, and it's kind of ranked it based on importance. So 40%, 30, 20, 10. So the 2 out of 10 rating on PE ratio, it doesn't really affect the actual rating that much. So it doesn't matter if Tesla's that profitable or that well valued. The more important thing is that these big companies that have big markets they're trying to take over, that they have revenue growth. So we've had great consistency with Tesla, but it's actually slowed in 2024. So that because of that, it's a 6 out of 10. If the revenue growth was better, I think this company would be an 8 out of 10, which would be even better for us to be using in our portfolios. And then margins, we need high margins, need some type of margins, and we need them increasing. So profit margins are decent, but I think Tesla is going to start losing possibly some of that, which would affect the rating moving forward. With all that being said, you're just plugging in the company and just checking the rating. And if you're doing that with the list and with the scanner I'm showing you here, basically you're looking for the highest paying options for 1 week out. Any of these stocks that are in this sector, they could be great to be using long term. You just have to plug them into the stock screener just to see if they're worthy of putting in your portfolio. So the second AI prompt I want to teach you about is how to pick the option to sell. Because with the AI coaching platform we're going to launch, you have to adjust the options you sell given the market conditions. And some of the most important conditions to check are VIX, trend, and any big events. So the VIX rising is not great for option selling, so you need to adjust. A VIX falling is good, so green. Stable is okay. Market trends, we want to be obviously bullish. Bearish is bad. Range bound is okay. These are the optimal conditions to be aggressive. And then any major events we might want to risk down. This is a major difference on how we teach our students to hit 10% in a month. And sometimes if you mess up, you're hitting 10% in a month. Because why? Most of the time the market is in good conditions. But the really good condition market, like with falling VIX and a bullish trend, they can allow you to maximize your decisions with option selling to where you can shoot for more than 5-10% in a month. If you can recognize those moments, just like Jake, you can be hitting 10 and mess up. So I want to go through kind of how the AI is going to work and how it's going to select options to sell. Basically, if you just want to understand the framework of this, it's going to help you sell options better anyways. But the ideal market to sell options and be aggressive is a trend in your favor, no major events, and a falling VIX. If those things are happening, you sell at the money and you sell longer out options for cash secured puts. And this makes a major difference on your P&L for that month. And your goal is to maximize the premium and profit as much as you can from longer term options. Because if you have the perfect market, these options just have a bigger bag of premium to collect. So a bigger bag allows you to collect more from that in 30 days or less, hopefully. A bad market, we're going to show you the opposite scenario. The market has a bearish trend, or there's some big events coming up which might make you size down, or the VIX is flying. This is where we sell out of the money. So all we do is we switch our strike prices to at the money to out, and pretty far out of the money in some cases. Now we're going to go short term, 7 to 10 days. I don't want to be stuck in a trade forever if the market's falling, because I can adjust and adapt my position if I'm in a shorter term cash secured put. So the goal is you want to have quicker time decay, rapid profits if you're correct. And if you time the market even when it's dropping, you can get in at a really good price and get the stock, which allows you to make money quick. These are basically the two differences of those trades. Up top is your ideal market, down low is your risky market. The difference of profit is $200 versus $27. It's a 10 times difference. And as you can see, the strike price is at the money. So $11.70, $12, it's at the money. The expiration date is 60 days out. This is ideal. So you're going to make 20% return. In a sketchy market, the one that with the less ideal conditions, short-term options out of the money pay 2%. So 2% versus 20 is huge. And if you're looking to hit a good month option selling, that switch at the right time will 5x your income. So that's super, 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 super important. That's the framework of how this prompt's going to work. So here's the prompt. Again, you can download all these prompts in the description, but basically it's going to output each type of option you need to use or you could possibly use, and it's going to recommend the one you should be choosing. So what you're going to do is go into like Grok and put it in, and it's going to give you the output. So ChatGPT or Grok, it's going to help you figure out which options to sell. This is my current portfolio, which it is analyzing, but it's also recommending me the new options. So healthy markets, we go aggressive strike prices, high up, expiration dates further out, and this again gets us higher premium. Risky markets, we call high risk, we're going to go lower strike prices and then shorter expiration dates, the ones expiring soon. This allows us to get less premium, but maneuver the markets better, and also accumulate shares quickly, and then maybe even play a covered call situation. In the middle here, you can see we're between the strike prices of 12 and 10, and we're between the expiration dates of July and October. So kind of a boring sideways market. You're going to kind of marry those differences and you're going to come up with this in the middle option. And this was what it would recommend in that scenario. So the question is, what market are you in? Which one do you choose? The prompt will tell you that. And so the next big issue for students is, hey, how much money do I put in? How do I manage my account? That's extremely important. So the next prompt we're going to teach you to use is the portfolio analyzer. This is what we do with our students with our software, but we will analyze low risk, high risk, and cash. Low risk is like CSPs, high risk is stock, cash is cash. So our goal is to manage those three positions in the different market conditions. Basically, healthy markets, rising, up, good trends with a VIX that's falling. We want to be low in cash. We want to be efficiently using our money, turning up the risk. So deploying cash as much as possible, keeping it under 20%. If we have any options that we're going to choose, again, we're choosing to put most of our money in the aggressive ones. And we want to make sure, again, the risk is analyzed properly in this market. So less cash, more CSPs. And then the uncertain, risky markets, we're going to turn the dial down. Cash goes to 40% in some cases. Your option trades, they adjust to this. Your goal is to basically stay in cash, buy the dip at the right moment when the metrics kind of line up properly. And then if you utilize your capital at the right time, like when the market's falling like this, you might have your most profitable stretches ever, which is kind of what we're seeing in the last, I'd say, 60 days of the market. We've had yet to hit a losing trade for selling puts, and you can see the streak is just crazy. So our one losing trade was April 24th and still returning 81% over the last 3 months. So if you see those risky markets and they've already passed, you're going to end up with the best stretch ever of profits if you utilize the market properly. So if you integrate leaps, that's a bonus. That's something that, if you have the risk tolerance, can boost your profits even more. So I would throw that in the high risk category. Basically, leap options like on Baba, we've recently bought on the YouTube channel, are up 30%. So if we're looking to kind of hit the next level of progress in the markets, 5% selling puts, 15% is selling aggressive puts, and then 30 to 50% is leaps. And so the other thing I want to show you is the trade recommender, the portfolio analyzer. Basically, I threw this prompt in, it analyzed my portfolio, and it said, look, at your positions are aligned. The market's healthy. You have short-term puts, you have some long-term puts. It's a good mixture, and your cash is low. So it wouldn't recommend me doing anything now because I don't have any cash available, but it's also telling me I'm not in a bad position. So it's almost validating my portfolio right now. And it says if any cash frees up, they're going to recommend me to go into the October options. So this is a really, really cool way to integrate AI. And if you want to win in 2025 and beyond, you have to do this faster. You have to integrate technologies faster. So this is just a free training you guys can use. And I'm hoping it helps you at least start selling puts and making your money and making your profits. Click the link below in the description. You can have these 3 AI prompts. You can start using them, and we'll hopefully see you start making money. Peace out, traders. Have a good day.